Simon, welcome to the August edition, a bit late, but nonetheless we are here, and so much has happened. We're into round, I don't even know anymore, of trade wars. It's been crazy. Boris Johnson is the Prime Minister of Britain, and he doesn't seem to have much of a plan. Everything's falling apart in South Africa, everything's falling apart in the world, and, everything's falling apart.
But summer has arrived. That's the one upside.
But summer has arrived. In truth, we didn't really have much of a winter. So, but with the arrival of summer has been a very interesting performance for July. And just looking in general, industrials doing very well in July. But I'm very curious because industrials did very well, but Pioneer Foods was the top performer in July.
So that's the PepsiCo offer at 110 ZAR, which boosted it. And there are a couple of things about the PepsiCo deal. The first is that we sit here in South Africa, to your point, and we feel browbeaten. I mean, that's on a good
because
day.
It's been hectic.
It's been hectic. You know what? There are Brits and there are Americans out there and Russians who say the same. We're not the only ones. But
at least the Americans have had a great market.
Yes, they have. But then PepsiCo comes and wants to buy Pioneer for some $2 billion. Now, PepsiCo does about 80 billion revenues, so this is a small number for them.
Yeah.
But they're not throwing away 2 billion. Although, at that point, I then want to pause and remind the listeners that as much as we critique our companies, and I mean South African companies, for going offshore to try and juice their earnings and buying duds, yes, looking at you, Woolies, famous brands, Brait and others, truthfully, the American companies, the developed market economies, they want EM profit to juice their earnings, and they make about as many bad decisions as our
we
guys.
do.
Yes. Looking at you, Walmart. 110, which is down. So this is their third attempt. A couple of just before Nene, they were talking, and that was going to be closer to 180 rand price. So this is 110. So it's a good price for PepsiCo. There was apparently an attempt while Pioneer was still part of, I can't remember who they were part of now, before they got unbundled and put onto the market. To me, so it looks like the deal will probably happen. There might be some issues around employment and the like. We've seen that before from Comcom and others. The big story to me is Zeda, who obviously owns a big slice of Pioneer, will now get cash for it. They seem to be supporting. They're about a quarter of the shares. They've traded at a significant discount to their holding in Pioneer, but their Pioneer stake was so giant that you never saw the other businesses they have, all those little small agri-businesses and the like. And they paid, I think, 99 Rand for their Pioneer stake, so 110 is not a great return. But what it does mean is they pay off debt, they give a special dividend, they've still got money left over to go and buy some more agri, some more citrus and the like. But now suddenly those little businesses which were overwhelmed by Pioneer now actually become important. And I think this, for the first time since Zeda got the Pioneer stake, I think this actually makes Zeda fundamentally worth looking at. And makes them a much more interesting business. But we are seeing, I was trading with Keith McLachlan, he obviously in the small and mid-cap space, and the spate of delistings is just gathering speed.
Yeah, which is unsurprising, I don't think.
Agreed 100%. There are some incredibly cheap, high-quality companies that share prices have done, well, I was going to say nothing, but that would be a lie. They've gone down in the last 5 years. They've got cheaper and cheaper. Earnings are okay to good, depending on which one we're looking at. But he reckons that 10% of his investable universe as a small mid-cap manager is being delisted this year. And that's a staggering number.
And quite shocking, I think.
Yeah, and this is a part of the cycle of markets. At the bottom, we see a lot of stocks leave, but I think two things. I think this time has been significantly worse than certainly I recall in the sort of 07 and the early 2000s and the 98 market meltdowns. This one has been a lot more aggressive. And there is a sense of a shrinking JSE, and what I mean by that is that we haven't seen during the upcycle, which was flat for half of that upcycle, but notwithstanding, we haven't seen the spate of new listings. Yeah, we got AB InBev, but we lost SAB.
Yes.
And we got Hammerson. We got a few, but we haven't had any sort
Big.
of marquee listings. And I got to say, Nikki Newton-King's retirement been announced, and I think she's been a brilliant CEO at the JSE. One of the things the JSE struggled with is that listing pipeline. Now, their biggest problem is that their competitors aren't A2X, ZARX, or whatever. Their competitors is DAX, as Toronto, as London. As the globe becomes sort of less and less, more and more borderless.
Yes.
Notwithstanding Brexit and everything.
I mean, forget the politics.
Yeah, forgetting the
In
politics.
business terms.
Yeah, and it does mean we're having a shrinking JSE, which is sad.
It is. I wanted to touch on Massmart because they're getting a new CEO who is coming from Walmart. And I thought that was quite interesting because I'm like, is it a good idea to get somebody who actually has no experience in South Africa to come and run the company when... I mean, I just feel like the US problems in South Africa, it's just not the same.
I agree with you 100%, except...
And I think Ed Con and others might...
Yeah, I mean,
have some lessons there.
David Neal at Clicks from the UK, Ian Moyer from Australia. We do have some foreign CEOs who've succeeded, but it's why do these big deals when people go, when companies go into different countries, different markets, because they are so fundamentally different. And you sit in your home territory and you're the king of the pile and you think this is easy and that you're highly skilled at it. And all of those statements are true. But then you go to a new territory and frankly, you don't know the rules of the game.
Yeah.
And I do wonder, so Walmart is obviously going to Walmartize Massmart. And I mean, let's see. I mean, I can kind of, Macro is not a Walmart. Macro is a different sort of beast. It's for buying large quantities. The US equivalent would more be Costco, and there you pay for a subscription fee. Macro, you just need to have a card.
You have
that ridiculous card.
That card.
So every time I go to Macro, I get a new card.
Yes, because you never remember to bring it.
Yeah. But frankly, they're desperate, and that trading update, and I know it's an August update, but that trading update was a horror show.
Yeah.
And particularly I appreciate Driven by Game. With respect, you go to a game and it's a flashback to the 80s,
yes,
which is exactly the problem with CNA. Now, I know that CNA is changing in format and everything, but CNA should have been typo.
Yes.
CNA should have morphed into that 10, 15 years ago and missed a trick.
And they're trying now.
And they're trying, and yeah, I mean, they're still, yes, I agreed. So will the Walmart person come in and save the business? It's going to be tough. It's also, can it get fundamentally much worse? Probably not. Their best hope is an uptick in the economy that can kind of paper over some of the cracks, because after such a prolonged weak economy, a quick recession, 6 months, a little bit of tough economy, a year or so, you can kind of sort of ride through it on your past performance. But when it becomes more and more protracted and harder and horrible and nastier,
chronic almost.
Yeah, and if you had any problems, they just get exposed so badly. I mean, ShopRite last year, which had a DC problem, they had an IT problem, they had a strike problem. All of those are management's fault. In a booming 07 or 2010 or 2013 market, those would have been hardly even bumps on the road, whereas now they're slicing a quarter of profits out.
Yeah. So I wanted to touch a bit on banks, because I think banks they had a very tough July, but I think Q2 also hasn't been particularly great to them. But the past 12 months also haven't been particularly great. I mean, I think it was Discovery also hitting 52 week lows. So financial services is, I think the interest rate cut obviously very, we could argue both sides, but I think very helpful, because we're hoping there's going to be some stimulation in terms of assets. But I'm grateful for the rate cut, but I just can't help but think, is it enough?
Probably not. And interestingly, who was it this morning who did a 35-point cut because 25 wasn't enough and 50 was desperate? And
that sounds like something like Turkey.
Well, no,
no.
Turkey did 350 points. So I think that there could have been a case made for 50 points, but it is our Reserve Bank, it is our governor, it is our MPC. They are proper die-in-the-wool bankers. They're going to be careful, they're going to be cautious, they're going to choose their words and their decisions with infinite care. And they meet every 2 months. I mean, there was a time when they used to only meet, actually it was every 3 months, that's not so different. Maybe it was 4, but they can, we can gather speed, and within a year we can be, 1.5% down. To the financials, I mean, if we look at the insurers, they're struggling from two things. One is no market movement, because of course they've got the float, our money until we claim, which they can earn profit off, but not if nothing's happening. And in this economy, people are shopping down. Do I really need that life insurance? Do I really need the expensive medical aid? Isn't there a cheaper medical aid? Vitality, it's nice, but how much am I really making from it? Those sort of hard questions are being asked.
And I must say that as somebody who very recently cancelled her Vitality subscription. In my defense, it's because I stopped running. But, that just taking to your budget and being like,
yeah.
I mean, my car was written off. I'm not replacing it, so I'm not paying insurance. I'm not going to be. There's so much where I realize that it just doesn't make sense. I did the maths and I said it doesn't make sense for me to buy another car.
And there are a lot of households in this country right now who are checking their budget and seeing where they can, because a large part of our inflation, which we can't manage, i.e. transport and electricity, is ahead of inflation.
Yes.
And it's hurting. So those folks are hurting. Discovery's also they've got a lot of sort of start-up-y things, the bank, the most recent, of course, and others, and questions around that, and the banking space in of itself is becoming immensely difficult and competitive. But banks, and we saw Nedbank results out again, it's an August number, but 3% HEPS growth. Truthfully, in this sort of economy, I actually think that's an all right number. Yeah, I mean, the fact that they are growing, and in the banking space, when you're a food retailer or something like that, you kind of expect it to. But in the banks, because you're seeing your costs go up, you see your customers transacting less, you see less loans being taken out, you see more bad debts, you see less deals happening in the investment banking space. 3% is the new exciting. That all said, I have been saying that our banks are cheap for a year maybe, and they did have a nice rally at the beginning of last year, a Ramaphosa rally, and looked really good, and they're now back at those levels, I will say it again, they are looking cheap. The bad debts are perhaps going to tick up, but they're ticking up off low levels. They've been cutting costs. We've seen some more publicly, some more quietly have been shuttering branches and staff and et cetera, and they're getting leaner. They're getting their cost-to-income ratios lower, not to the levels we saw pre the 08-09 crisis. And in fact, I asked Jaco Marais when he was still CEO of Standard Bank, would we ever see those levels again? And he said nope. He said the low 50s are no longer a cost to income for a large bank. It's now sort of the mid 50s are your targets.
In South Africa.
Yeah, there's new costs coming in, and Capitec's a different beast in its entirety. But for the big four, the big five, there's new cost structures that have come in terms of compliance and regulation and all of that. The banks are cheap, but what the market is saying is, sure, they treat cheap. That's a true enough statement, but are they not just going to be at the same earnings next year and the year after? In which case, what's the rush? And the answer to that is fair point.
All right, and then I want to touch on some of the 12-month consistent, just right at the bottom performance. Brait.
So Brait's a horror.
Virgin.
Yeah.
What is going on?
So I mean, Virgin's so Brait bought New Look and overpaid by exactly however much they paid. And then they had their share incentive scheme, and then they tried to get a new share incentive scheme, and Christo Wiese could only muster 76% of the votes, and that includes him voting for himself. But also they've got a lot of UK businesses. We've seen it with Intu, we've seen it with Capco. The UK is not a happy place right now, and what they're essentially being squeezed to do is sell some of their assets, some of their performing assets in order to sort of fund the business. And they've got Icelandic Foods, they've got Premier. I don't think they would. Icelandic, I think, is having a tough time of it. Virgin is doing okay. It's got a good brand behind it. It's in a good space looking forward in the health and fitness, which becomes more and more popular. I'm old enough to remember when the only health and fitness was Jane Fonda on your TV in the morning. And no, I did not ever put on spandex and Jane Fonda, but I did have family members who did. And that certainly is a trend. But again, there's a cost associated. Virgin gyms are there's a price. And there's price wars. We're here in Rosebank right now. You've got a gym here at under $300.
We've got 3.
Yeah, but you've got that.
Area.
There's a fancy cheap one at under 300.
Viva, we've got
there's a Planet
Fitness, and then we've got a Virgin.
And the Virgin's probably 800 or so a month. I don't know. I mean, I go to I go to a cheap Virgin Active in down in the city.
Run.
I can't run. But it's one of the assets they can sell a bit of, and this is when you start to get squeezed. And this comes back, and I think I've mentioned it before in this podcast, Warren Buffett's letter to shareholders. He talks about debt, and he says debt is a lovely thing until it's not.
Yeah.
And when when it's not lovely, you're playing Russian roulette. And this is the problem that we are seeing across markets. And this is including AB InBev and British American Tobacco, respectively SAB Miller and Reynolds, which they paid top price for. A lot of our local businesses who did large acquisitions locally or internationally. And suddenly it starts to hurt. And debt is cheap, but you still need to finance it. You still need to pay it down. And if you've bought something that isn't performing and your other assets that you had and still have are struggling, that debt suddenly becomes quite very scary, and suddenly your bankers are in a sense running your business. And I'm not saying that in a nasty sense. The bankers are there to protect their interests and by proxy the shareholder interests. And of course this is what bankers do. But debt covenants are being breached, and it starts to get very, very messy, and it just spirals. And companies like Consolidated Infrastructure, Ellie's, just two who, because I've been reading about them this morning, who spring to mind, who were doing great, hit some speed bumps, and then the debt overwhelmed.
We spoke about them last month. Intu.
Yeah, so last month I was trying to be polite about Intu. I thought they were in a very tough space. It turns out I had no idea how tough. The results that came out were horrid. In terms of performance, in terms of what they're expecting. They're expecting negative rental increases going forward, occupancies, and there's a couple of stories here. One is the UK.
Sorry, I just want to give context, because past 12 months, so 52 weeks, down 69.1% in rand value, down 76% in actually 76.7% in dollar value. So if you round up,
it's been horrid, and they got a couple of things. So high streets in the UK, and I remember going to the UK and thinking high streets were weird, but this is how much of the world does operate. To them, shopping centres were weird. I was in Prague in 2009 when the first shopping centre opened, and I'm like, what did you guys do before
this? And it is weird because there are no shopping centres. You just you walk and there are shops.
Yeah.
And you're like,
yeah.
So you guys don't have a place where you all go? No, it's just. Yeah. It's weird.
And they do have, and they are coming up. But so they're getting squeezed from a couple of things. The UK economy that's struggling, tenants who are struggling. They've got a process there, which I forget the name. So it's kind of like a forerunner to bankruptcy. And Famous Brands did it with Gourmet Burger, which gives you the right to basically go to your landlord and say, look, give me a better deal or I shut. And landlords are being squeezed. And in this type of environment, they're saying, here's the better deal. So you're getting squeezed. Businesses are also just going bankrupt. The UK is frankly right now lacking confidence because of the unknown around.
We really don't know.
Yeah, around 31 October, is there hard Brexit or not? Are
they even going to have a prime minister?
Well, I think Boris Johnson's just angling for a general election because he knows that Theresa May put this to the Parliament a number of times and it never passed. And what's going to change now? And then there's all the talk around things such as but it's also all of the sort of Amazon and online shopping, etc., which I look at it and I think this sounds bogus. But then I think about my brother-in-law who lives in the continent, and he buys like everything from Amazon. Like I mean, not fresh produce because they don't supply it, but everything else: socks, toilet paper, soap. Everything. Now he lives in a small little town outside of Cognac in France, so it's partly convenient. But I remember him doing this when I was there in 2010ish or something. When he lived in London, he lived in Chelsea, and there was shops downstairs, and he would Amazon them. So I don't think. And if you look at the numbers of Amazon in terms of market share in developed markets, the UK, the US, Europe, it's single digit, it's growing. So in of itself, it's not the problem. But you add all of this together, and you're losing 5 or 6% of retail sale to the online folks. 10 years ago, there might not have been a problem. In this current environment, it is. And Intu, those results were a shocker. I mean, there's just no polite way of putting it. A month ago, I said I expected it to be tough. They came out way tougher than I had expected.
Quite the shock.
Yeah.
I wanted to also touch on Imperial a bit, because they're also, I mean, there's quite a lot. And after Imperial, I think I want us to just chat a bit about the retailers, because quite a few, actually, almost all of them, are in here in the bottom performers for the past 12 months. But Imperial, what is the problem?
So Imperial, and I don't know if your number was adjusted for, they spun out their car division, so you now got the Motus, and the two together are still down. And Imperial's struggling. So they've got an Australian operation. That's one of the offshore ventures which did work.
For them. They were lucky.
And truthfully, Aspen did one as well, now that I remember. Aspen did an Australian acquisition about a decade or 12 years ago as well. That also was a good deal. So it does sometimes work, about 1 in 3. But Australia is having a tough time. Here's a random stat. The Australian Stock Exchange only has now got back to its all-time highs from pre-crisis, in other words, the 2007 levels. 12 years to get back to those levels. So but at least they didn't do what we did, which is we got back quickly and then we went sideways. They just never got back. It took them 12 years. A very, very commodity-driven country, which is showing some signs of strain at this point, which is weird because commodities are high. But I've got friends there, and house prices are under pressure. And I'm not saying the economy is going to collapse, but it's showing some signs of strain. But then, of course, Imperial's got South Africa. And, logistic companies are quite simple. They're a play on GDP. They've also, they've got rid of the motor side, which is really, really struggling.
Yeah.
But they're a play on GDP, and we don't have any GDP to play with.
We're not even a player.
And we can look at the others. We can look at value. We can look at Santova, who's got half of their earnings offshore, but a lot of that earnings originates in South Africa. And it is just really, really tough out there. And these folks, there's just less trucks on the road is the short answer.
I suppose within that very tough environment, you've got the retailers, as I mentioned. It's been horrid.
Yeah. True's update was a horror. The ShopRite update, if you broke it into two halves, the second half was better than the first half because their year end is June. I mentioned a moment ago the problem with their June to December was a lot of it was self-inflicted with strikes, with DC issues, distribution centres, and with the new IT system, and worries about the YT Besson halo effect missing. I'm less convinced about that. The chap who came through, Engelbrecht, worked with YT for 2 decades and stuff. The Woolies update looks like they got fashion right, which they do. About once every
Let's not get
6
too
or 7
excited.
years, they get it right for a season. But it looked like their food was coming back. What we still saw with ShopRite was just under 10,000 product items which they have a disproportionate market share of, which have negative to zero inflation. A year ago it was 6 months ago it was 11,000. So the situation is improving, but still being squeezed. Now, the ShopRite results to the 6 months December, I was surprised at how well they held on to their operating margin at 4 and change. I thought it would drop into the mid threes, maybe 3.6, 3.8. It stayed at 4.4. I was amazed at how well it held up. But we're going to be seeing that margin squeeze coming through. Woolies, David Jones, still a disaster. And again, it comes back to those household budgets are being cut. Do you really need new clothing? Do we really need that whatever? Can't we find a no-name brand? Can't we find a cheaper product? Can't we substitute? Now, in the older days, that would have hurt the likes of Woolies a lot more as customers shop down to the ShopRites and the USaves of the world. So in a booming economy, they shop up, and in a struggling economy, they shop down. But of course, everyone's moved everywhere. Woolies would tell you that they're much more price conscious. ShopRite has got Checkers, which is sort of trying to fight the higher LSMs, and they've kind of left their niches, which makes them more exposed. But we are a consumer, and the trick with our consumers, we've done if we view it as a nation of consumers, we have really struggled along incredibly well. But it's the relentlessness of it. It's that now it's almost we're a hop, skip, and a jump from 2020, and it's still we're not. Is that light a train or the end of the tunnel? And year 1, year 2, year 3, we were doing all right. The bad debts are under control, and debt in itself, household debt is not out of control, and that's National Credit Act more than anything. But it starts to grind. And then you're being squeezed on those non-negotiables, transport, electricity. You're being squeezed on education for the children. You're being squeezed on the ones that you can't really wiggle through.
And I think Karo is a...
The Karo update is a great example of that. And everyone talks about Advotech is blaming immigration. They're still growing numbers, but they're struggling to push through increases. They're struggling to find bad debts. Their bad debt situations are worsening. And Karo at 3 to 9% on a stock that ahead of that update was at a 40 PE. It's a shocker of a number.
Yeah, I think, and when I read their update and started reading all the comments, I just thought, I actually don't think people understand how badly squeezed people are. People are cutting down drastically.
So then the question comes then it boils down to, do you believe there's a future for South Africa or not? And if you think there isn't, then it's simple. You need to buy a plane ticket and don't worry about everything
Except
else.
It's expensive to leave.
It's expensive to leave. Yes. Zimbabwe. But there is value here, and this is why Keith McLachlan has lost 10% of his investable universe. This is why Pioneer Food Group has been taken out. The trick is that it doesn't feel like it. It feels like we're battered and bruised. And truthfully, that value might become cheaper, because this is not a new story that I'm talking about.
Yes.
I would have said this a year ago. And the fact that it's lower doesn't make me wrong or the market wrong. It's just that it is relentless and grinding. And what I'm seeing, what's differentiating 2019 from 18, 17, 16, and 15, let's leave 15 because Nene was December 15, is we are starting to lose confidence.
Yes.
We're starting to lose, for want of a phrase, our sense of humor. And that is...
It's getting serious.
And that's depressing and scary. And either we're sitting on one of the best investment opportunities of a generation, or it's just going to get a heck lot uglier. And I know which side of the fence I sit, but I truthfully don't know which side is right. I mean, we'll know in 5 years, I guess.
We won't know.
We will know in time, but yeah.
We could be having this conversation in a year's time.
And our biggest risk, and I've always said this, is less internal, and certainly there are risks internal, and Eskom is obviously the top 10 on that list. All of the top 10. Our biggest risk is a global slowdown.
Yeah.
And with Fed cutting and all the rates being cut everywhere, and the S&P is flat for over the last 12 months, and all of those sort of bits and pieces, it's looking rough out there. Yeah. And what we don't want right now is a global slowdown in the midst of us muddling along and struggling,
because it's going to hit us.
It's going to hit. So what might happen is we might get hit less hard because we're already so low down, but that doesn't mean we're not going to get hit, and less hard is relative.
Because it depends on where you are.
Yeah.
All right, Simon, thank you very much. As always, very insightful. And let's just hope we keep plodding along.
I think we will.
Pace.